Greetings, members one and all of the Salivation Nation. Gold, as it stands now, all of it above the ground, is worth $8 trillion. This article comes to us from Numismatic News, pointed to me by Donald in New Mexico, and it's quite interesting, the statistics that come to us from the World Gold Council for gold above ground at the end of 2017. There are about 6.1 billion ounces of physical gold extant in all the world. This does not count gold still on the ground or in the water waiting to be mined or extracted. That includes supposedly gold that's in Chocolate Mountain or gold that is deep in the seas, and probably doesn't include the gold that is unaccounted for or from recent treasure finds, notably the one in Russia recently. And it also doesn't include the supposed gold that is in the Grand Canyon. But with that being said, with all the numbers, as noted here in this article, that adds up to almost 6.2 billion ounces. Of the total, just over 1 billion ounces are held by central banks, governments, or other official organizations, such as the International Monetary Fund or the Bank for International Settlements, BIS. And almost 3 billion ounces exist in jewelry form, although most of this owned in China and India, the world's two largest gold-consuming nations, is owned as a source of wealth rather than for adornment. And that's fascinating. And some of you may remember a video I posted quite a while ago about wearable wealth, about being able to buy gold bullion in the form of bracelets. Another 1.25 billion ounces is in the form of coins and ingots, which are held in the long term almost exclusively for, quote, investment purchases, although I like to see it as wealth preservation or hedging purposes. Exchange-traded funds, ETFs, and similar investment entities such as futures and paper gold held almost 80 million ounces, and to me that's quite telling. If this is exactly right, then that's a very, very small amount, although that world has got to be analyzed a bit more, because it seems to me, especially in silver markets, there's a lot more paper silver than there is physical silver, and I can't imagine that being much different in the world of gold. That leaves about 850 million ounces used in other fabricated products or otherwise not accounted for elsewhere. And that would include things such as using it for industrial and technical applications, such as computer chips and the like. But it's quite fascinating indeed. Using all those numbers that they give us, I went ahead and created a spreadsheet and chart showcasing, visualizing where that gold is laid out. And look at that, jewelry is by far the biggest aspect, and jewelry includes wearable wealth, such as is the case with India and China. And that's going to take up the bulk of that, almost half of the pie there, so to speak. Jewelry is the largest by far, which means that the people themselves are positioned in a much better place in terms of wealth preservation in those eastern countries of the world. In the Orient, in the Middle East, for sure. Quite fascinating. And then we look at the next largest pieces of the pie, and that would be central banks, as was mentioned, and coins and bars, which is us. You know, we, the people. So if you look at this pie, if you include jewelry and coins and bars, that's privately held and owned gold. Almost 3/4 of this pie is in the people's hands, essentially. And that, to me, is quite fascinating and quite telling. And I think it's good to see it in this manner or form. And then we have the rest of it, industrial and technical fabrication here, making up a greater part. here where it's used in industry, and that would make sense how it's being used, considering that gold really is treasured, as we see from 3/4 of this pie, and even by central banks and governments themselves. I'm actually a little bit surprised that the central bank's portion of this pie is not larger than it is. And then another quite surprising aspect, as I mentioned earlier, is how little of it, 1.3%, is in exchange-traded funds or paper gold. Quite fascinating indeed, if that's from the official numbers from the World Gold Council. Moving ahead, this author of this article here, Pat Heller, says that while the World Gold Council produces an impressive amount of statistical data, he does not consider it to be fully accurate. Back in 2003, the Chinese government started accumulating significant gold reserves. He learned of it at the time, but did not receive sufficient corroborating evidence until 2005 to report on it. In April 2009, China finally admitted that it had acquired about 14.5 million ounces of gold since 2003. Sadly, the WGC, World Gold Council statistics, never showed this demand in its data, nor what were the sources of this gold in their data on supplies. The author is convinced that the Chinese government has continued to accumulate physical gold above and beyond the quantities it is reported to the IMF, which the WGC still does not fully include in its supply, demand, and inventory statistics. It is possible that some of this extra gold it has acquired may be part of what the WGC considers to be unaccounted for. At the end of 2017, the 6.1 billion ounces of physical gold at $1,306 per ounce was worth about $8 trillion. Of course, now it's gone down since then. This is not a significant figure in global finances. That's the understatement of the year, especially since only a small fraction of physical gold ever changes hands during the course of the year. For example, outstanding U.S. Treasury debt is about double that amount. As of June 30th, 2018, all the stocks in the Standard & Poor's 500 index had a combined market value of around $23 trillion. However, global daily trading volume of paper contract for gold for about 12 months ending June 30th, 2018 averaged about $150 billion, almost 10 times the average volume of daily trading of the 30 stocks that make up the Dow Jones Industrial Average, derivatives anyone. In last week's column, the author discussed the unusual activity in the settling of mature COMEX gold and silver contracts, where the owner asked for delivery of the underlying metal. It is possible that the mysterious activity of the gold and silver paper trading markets may be covering up for the growing shortage of physical supply. And I'll make a personal note here. My coworker, who actually is getting into the paper market, said that they are not really interested in the physical at all. It's about the money taking place, cashing out from the paper. So in other words, they're not interested in getting the physical. They're interested in getting the gains on the gold and silver as cash, or if they were going to cash out, it would be in that form. It's just another stock to them. Early this week, gold and silver prices had fallen to the lowest level since mid-July 2017. If the U.S. government is aggressively working with its primary trading partners and allied central banks to suppress precious metal prices, such activity cannot last over the long term. In the author's judgment, current prices are likely to be perceived as a bargain buying opportunity when we look back at them within the next couple of years. And I actually agree with that. I believe that in the long run, we're going to see this play out to the advantage of the precious metals markets, and we're going to see prices go up. And I think this is the case because gold is treasured specifically, and I think this is why we're seeing this disparity between gold and silver prices, the gold to silver ratio as such. Look at 3/4 of this pie. is the treasuring and the holding of gold and silver by private entities. Not to be mistaken, as the author points out, the central bank accumulation, this number by the central banks could be higher and could take up a bit more of the industrial technical fabrication slice of the pie, if it's indeed accurate numbers of 6.1 trillion ounces of gold. Quite interesting, or billion ounces of gold. Quite interesting indeed, fascinating all around. Post your thoughts below. I'd like to extend a multitude of gratitude to Donald in New Mexico for sharing the article with me. And hope this chart was useful for you guys to help visualize this. And I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.